Hi, everybody. This is ACC4620, Auditing and Assurance 2. I'm Dr. Gregory, and we're going to go over Part 2 of Chapter 10, which is Auditing Cash and Developing Substantive Testing. Now, we want to make sure that we're selecting and testing those controls that are pertinent to cash. So we want to know if the cash accounts are accurate, whether cash receipts are appropriately recorded, and we want to also look in at the controls to determine if there is a limitation of access for individuals who have the ability to perform electronic or ACH transfers of cash. So some of the controls we would want to do are looking at bank reconciliations, looking at our internal controls for our segregation of duty, and also within our internal controls over to the authorization of passwords. And we also want to know what the relationship of these employees are with financial institutions. We could test these controls by doing some oversight, observation. We could review the reconciliations. We could recalculate those reconciliations. We could look at the procedures we have or the procedures the client has in those duties, review IT authorizations for who has access into what levels of the system. And we might want to confirm with the financial institution on who can open or access bank accounts. Now, if some of these areas or these controls that we test aren't working, we might find ourselves looking at unusual transactions, transactions out of sequence. For example, you do a bank reconciliation and you start seeing checks that are out of sequence. You might be looking at straight theft and misappropriation of the cash assets, or we could be looking at some type of lapping scheme that we discussed before. We could also have people who have inappropriate access or authorization to the cash accounts, or who perform transfers to erroneous accounts by setting up false accounts. So you want to expand through confirmations with the financial institution. Don't just rely on what the client has, because we can find through the bank confirmation that there may be other bank accounts we may not be aware of. Now, when we're performing those tests, as I said, we could inspect records, observe employees. We could perform recalculations of those bank reconciliations to make sure that the adjusted bank balance meets the adjusted general ledger balance at the end of a period, and then make sure we trace any of those fees or adjustments that we have to make to our books and records to the general ledger and confirm them. Let's shift over to the cash portion of marketable securities. Marketable securities are any debt or equity securities with a maturity of 1 year or less. We could have T-bills, CDs, and we classify when we're presenting them and disclosing them in the financial statements under 3 different titles. The first one is held to maturity. The intent of management is to hold these for the long-term income. We would amortize them, and held to maturity securities are subject to those impairment rules. So you have to brush up on the impairment rules. Trading securities is the intent is to hold these for just short-term income. We need income for something. So we invest in a trading security for just a period of 3 months. And the intent is to hold those just for those 3 months, gather whatever income we can, and then sell them off. Available for sale securities is where the intent of management is to have active trading and sell prior to any maturity. So for both trading securities and available for sale securities, we need to make sure that they are recorded, reported, and disclosed at fair market value. Just like cash, there's a lot of inherent fraud and control risks to marketable securities. We could have an inherent risk, which is, again, the natural risk that's associated with that type of account. Marketable securities can be volatile, and you might find yourself in market declines. You might have fraud risks, such as management manipulation of the classification of those securities, as well as the value of the securities, or just the straight risk of theft. Some of the control risks, which are areas, the risk of the account because of company issues, could be we have poor policies in effect regarding the purchase, the holding, and the sale of these different classifications of investments. We might have internal control issues, such as segregation of duties, authorization, who has authorization and access to these securities, ensuring that the securities are reviewed regularly for valuation, as well as monitoring. Now, looking at management's 5 assertions that we've seen throughout this class, here are some suggested tests that we could perform pertaining to marketable securities. We want to make sure that management gets us a market securities schedule, and we want to do some tracing and vouching on that. Trace from the source document to the general ledger, pick a general ledger account and vouch it back to the source. We want to ensure that the valuation and the schedule is current and complete. We also want to make sure that if those securities are used as collateral, or if there are any restrictions on those securities, we are properly disclosing that in the financial statements. We may want to recompute the interest of a security, make sure that any recognize any unrealized or realized gains and losses. And we need to confirm that the classifications are accurate and conform to the security's intent and management's intent. Now, sometimes the intent changes, and that's okay. Management may make the change to go from a trading security to an available for sale security, depending on an issue or a decision that comes from management. If the intent changes, we have to make sure that the documentation is in the records and is properly disclosed. Now I'm going to switch over and talk just a little bit about complex financial instruments. This may require specialized knowledge by you or bringing in an expert who understands these types of instruments. And some characteristics that we have are interest rates that are above normal terms would be a complex financial instrument. There may be preference and liquidation of those instruments. We may have situations where, due to the financial instrument, there may not be a market quotation available, and you would have to develop a rationale to try to value that financial instrument. It may be a security that is not publicly traded on the market. There may be convertible securities where you can defer payments or have contingencies to replace an instrument with another instrument. You may have sell or put options. So go to Exhibit 10.17 in your text. There's a very comprehensive list of complex financial instruments, their names and their definitions, kind of give you a feel as to what types of instruments are out there. Again, these have a number of risks. Inherent, the nature and complexity of these financial instruments increase the risks in these accounts. You may have employees working in these accounts that may not have the knowledge it takes to understand the language and the requirements around that instrument. Management may manipulate the valuation of those instruments through oversight. They may use instruments that are restricted and used for collateralization in other ways. For example, they may want to try to sell an instrument that is being used as collateral for some type of debt or loan. So you have to understand, when management needs to make decisions regarding this, they have to be as equally informed about the complexities behind some of these instruments. And that may lead us to the control risks of management may not understand what these instruments are. For example, back in the 80s, there were so many issues surrounding the purchase of junk bonds, where junk bonds were being sold that were supposedly high risk, high reward. Management and companies were buying this up, not really understanding what a junk bond was. And when they defaulted or they failed, companies then had concerns about whether or not they would be able to withstand the loss of those complex instruments, because most of those are much more highly valued and as a result sit very prominently in the financial system and the financial statements. Management may also purchase these instruments for the wrong reasons. They may purchase hedges in fuel or commodities and not really understand what they're all about. And there may be a general company lack of policies and procedures on how to handle financial instruments. So when in doubt, use an expert in the field. So in summary of this very short video, we looked at testing controls pertaining to cash and looking at what substantive tests we might perform in order to meet management's assertions of cash. We also talked about marketable securities and all of the inherent fraud and risk controls surrounding marketable securities and how to test marketable securities. Finally, we just touched on auditing complex financial instruments and the inherent fraud risks and control risks and inherent risks surrounding them. If you have any questions on this, please be sure to reach out. Do read the entire chapter, as I am only providing highlights and overviews, and I will see you in the classroom.